Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, flying solo. Brighton, London is not able to make it today, but I'm excited to be actually recording this from Tallinn in Estonia. And I've got Kenneth Lewis, the CEO of APMEX and One Gold. APMEX is, we just were discussing, one of the leading online dealers of precious metals in the world. And so he is the man who's going to explain how gold ownership is evolving. So the perfect man for the job. Ken, if I can call you that, welcome to the show.
Thanks. I look forward to it.
Mate, there's a lot to get to here. Often in this show, we discuss ownership of mining stocks and royalty streams. Mm-hmm. And for those who maybe are less familiar with the field, what is the case for going with physical precious metals, for actually holding them? I mean, then we can discuss, I guess, the different types of ownership, whether it be an ETF
Sure.
or some sort of vault. Why would you go for, I've heard it called a sterile asset. I know you've heard that term before as well, for precious metals.
Well, we've done about $15 billion in revenue on the physical side, founded about 19 years ago, and very loyal customers, and they have very strong beliefs about holding physical, and we support those beliefs. A lot of people tend to be in a couple of buckets. First, they're maybe a little bit less trusting of the overall economy, the government, the financial systems, and they're just a little nervous about that.
Can we say preppers?
I think to a certain degree. It's funny. I think it's a little broader than that. Believe it or not, I have plenty of friends that own physical, and one of the reasons why they own physical is they kind of like it being off the grid. They like it being something that can pass on to their children one day and not have to have the government involved in that process. They just kind of like it's like having cash a little bit. I think some people, look, gold is the oldest currency that we know of. And I think some people don't necessarily think there'll be a day where they got to take their gold coins and buy a product again, but they like the idea of knowing that it's very liquid. It has an intrinsic value to it. And, it's been around for so long. So I think that safe haven idea or concept and the fact that you can physically have it, off the grid and offline is appealing for some. And, as evidenced by the volume we do, I got in this industry about 8 years ago, and I really never heard of precious metals, physical gold ownership or silver ownership. But as I've come around, I can see the merits of it. Frankly, I like to tell people, whether it's physical, digital, or paper, metal in a portfolio or even mining stocks or others, having some kind of exposure to metal is a fantastic diversification strategy in general. You just have to go back and look at the data and look at how the asset class performs. It's a smart thing to have in your portfolio, at least as a diversification strategy.
That's the way we usually describe it, that we say it's some sort of wealth protection, and it's even more private and resilient than straight cash. Now, we've discussed on this show as well the challenges associated with this transition to a cashless society, because cash has many attributes, particularly anonymity, privacy, that the digital world tends not to offer. That may change with some particular coins, but the digital coins that maybe, I'm not sure whether they call them privacy coins or something like that, but
sure.
But there will come innovations to protect privacy online, but at least for now, cash basically is the most private, and then gold, I guess, would be even more private than that, although maybe less liquid than cash. But then the challenge is how you own this. And we're going to get to this because I know you've got a project, or you're heavily involved with digital ownership of gold, whatever that may mean. But I guess there are three ways we might think of owning precious metals. One is you own an ETF or own paper gold, which is problematic. Two, someone holds it for you in a vault and you might pay storage fees. Or three, you actually get it, and then I don't know where you hide it, but you have it somewhere in your own possession.
Right.
Do you want to address the merits of those three?
Yeah, I mean, I think there's no doubts there. You look at the paper side and the amount of volume that's gone into ETFs over the last 10 years, and its simplicity of going through your broker and being able to do that
Yeah.
very directly. I mean, it's appealing, and I can see where people's interests are in that. I think the challenge with ETFs, in many cases, you don't know whether there's really a true asset backing it. You worry a little bit about the banks and security.
If I may interrupt you there,
Yeah,
I
sure.
mean, many people I've spoken with, particularly at the New Orleans Investment Conference, they strongly affirm, and I don't know whether this is just accepted, I'm not sure who disputes this, that there is more paper gold than physical gold.
Yeah.
What evidence do we have of this, though?
There's people that have done some studies and have really tried to correlate how there could be enough physical to back all of the paper out there, and basically looked at the output of mines. And there's various people that have done analysis that would say that they're going to come up short on the physical side. What I'm really quoting to you is just some speculations and concerns that people who do buy ETFs have. Whether that can be proven, look, there are some ETFs I know for a fact, actually our partners at Sprott are a great example of this, where they hold the physical and they always know the physical is there to back it 100%. So there are some ETFs that do that, and they have it under lock and key, and they're not held by a bank. They're held by a mint or a third party that I think is a little more trustworthy potentially. So I know there are some ETFs out there that are fully backed, but you think about, I don't want to take shots at anyone, but GLD or some of these really larger ones, the volume they're moving, it does bring into question that to a degree. I wouldn't make that be the reason I don't buy an ETF. I would say that there are some other challenges of ETFs at times. They can trade at a premium or a discount to what Spot is doing, which can be troublesome depending on when you buy in.
Well, the incentive to release more paper than there is gold is enormous, of course, because it's just free return. It's a free return.
Sure.
That I think most people can understand, and it's a return to fractional banking. But you said there are other problems. What are those?
Well, I think it's a couple of them. First and foremost, they sometimes trade at a premium or a discount depending on your time getting into the asset. You could find that, let's just use an example. Gold could be up 5%, but your ETF could be up 4.5%. Because it doesn't always move directly with the metal price. That's one. And then two, the fees. They're going to hit you for 40 or 50 basis points a year per year. There's a cost of doing business. And then, the final one that we like to highlight is, ideally you'd be able to convert that to physical if you wanted to.
But with an ETF, you just cannot. I mean, that's just not an option.
It isn't, and there are some ETFs that are making that easier, but you'd have to have a very high net worth and basically take a 400-ounce gold bar, and they just make it prohibitive. So for obvious reasons. And so, look, I'm not saying ETFs aren't viable. I think they are, depending on the person. They're instantly liquid, which is great. You can trade them on a moment's notice. They're convenient. So there's a lot of attractions to ETFs out there. And then I'm going to jump all the way to the other side. The other extreme is physical metal. The nice thing about physical metal is what people will say is you don't own it, you can't touch it. You have it under your control at all times. But there are some challenges, right? You mentioned one of them. That is, where do you store it? Are you insured? Those elements. There are, obviously some inheritance planning and things like that where you can pass on your wealth now to others more conveniently. People love that attraction of precious metals, physical metals. And then some people love to play metals for what we call premium appreciation. So they'll invest in certain products that have a chance to grow in value independent of the metal value due to its rarity. And so those are elements, but there's negatives, right? The negative is the insurance piece. Where do you store it? The other negative is instant liquidity. It's not the easiest thing to sell your precious metals. We try to make that easy here at Amex, but still there's a process you have to go through.
Tell us about that, because, pardon my naivete here, but presumably there are gold buyers in every town on the planet. But
yeah,
the question is just what premium will they take, what bite will they take out of the price?
It really depends on the person, what they own, who you're selling to. But what we've seen, you could have a 1% to 2% spread very easily depending on the product you own, and that's the cost of doing business of having physical. And that spread can vary. It can be greater, it can be thinner, depending on the products, like I mentioned, and also who you're selling to. A A lot of times people will go to coin shops or coin dealers because they're in their local community. It's easy. They maintain the privacy. But the negative is you don't always get top dollar for it when you go to sell it. Using an example of a gold eagle, you might pay $40 over spot for a gold eagle, and you'll walk into a coin shop and they might pay you $10 back. So you could be out $50 on the spread, depending upon who you sell it to, the timing of the markets. Right now, precious metal demand is a little lower than it has been. And so as you can imagine, when you go to sell it, because there's not a lot of demand out there right now, you're seeing premiums kind of take a little bit of more of a broader spread than they normally have been at. But that changes when demand starts to pick up. You see the spreads start to tighten. So it's just all supply and demand really. But yes, you can find buyers of it at all times. It's really what price they'll pay. And it's also, frankly, finding people with integrity sometimes can be a challenge.
What do you mean? In that they'll be scraping the coins or something like that?
What I mean by that is, really my main direction there is people don't always pay you a fair value because they have an opportunity to maybe get it at a better price. That's why I always recommend to those that are looking to sell, give your online dealer a call. Someone like an APMEX will give you a real value of that product. So when you go to a coin dealer, you kind of know what your starting point is, because sometimes the coin dealers will it's kind of like buying a car or anything else. They take advantage of the emotion, the convenience, the instant cash, and they make a little bit more money on that, where companies like APMEX will send you a ship label, will have insurance on the shipment, and will pay you within 2 days. So, as long as you're comfortable packing it, shipping it, you'll get paid much quicker and oftentimes get paid much more money for that product.
For more than 40 years, top financial experts and private investors from all over the world have gathered for the New Orleans Investment Conference to discover new opportunities and strategies, exchange ideas, and plan for the coming year. To learn more about today's investing environment and updates, join Peter Schiff, Brian London, Peter Bookvar, Rick Rule, Doug Casey, and dozens of experts at this year's event from the 1st to 4th of November. Go to neworleansconference.com to register. For a limited time, enter promo code PODCAST for a free Gold Club upgrade.
So basically, the vault option, for people who don't already have this is just where you pay someone to basically hold it for safekeeping. The advantage is that it's obviously more liquid and that they will just buy it back from you.
But there's actually a couple things on that. For holding your physical, there's really two types of that. We've developed a new product called One Gold, and I'll talk about that in a minute.
Right.
And then we have a product called Citadel, which is traditional storage. So traditional storage is you go onto an online website and you buy your metals and you buy exactly what you want. You want certain silver eagles, silver maples, some gold, buffaloes, whatever. You buy exact product that you want to hold, and then you just ask us to hold it for you. And then we bill you a fee per year to hold that, because we're paying a fee to a third party, which is Brinks in our case. And you feel comfortable knowing that it's being held by a third party. And at any point in time, you can take that metal and you can ask it to be liquidated. You can have it shipped to your home. But the key in that is you own that metal. That is your product. It's segregated, it's stored just for you. There's no commingling. There's no pool position, none of that stuff. So that's one type of storage. And that's fairly common. We do a bit of volume on that, mainly because people don't like the idea of storing it in their home, but they love the idea of knowing what product is being held for them. So that is one element. And there are attractions to that. But you're also thinking about paying a storage fee that tends to be, 40 to 50 basis points, similar to an ETF. And then you have the spread issue when you go to sell. So there's some challenges with that. But as long as you're a long-term investor, we think generally that works out pretty well for you in the end. But the new concept that's really starting to take shape is where we hold the metal for you in pool form, and we're able to get you into that metal at a cost that's dramatically lower than buying a fabricated finished good product.
What does this mean in pool form?
Yeah, it's a good question. So I'll give you an example of what we're doing right now. So we've partnered with the Royal Canadian Mint in Canada and a company called Tradewin. Tradewin actually provides blockchain technology. It's a permission-based blockchain. It's not publicly accessible unless you have certain permissions. And what it does is we record our ownership interest onto the blockchain of metal that we have at the Royal Canadian Mint. So that metal can be in a number of forms. It can be in grain, it can be in bars, it can be in doré, but basically that metal is inside the Royal Canadian Mint, and they acknowledge that that metal's there and that we own the product. And then what we do is, after we procure that ownership and move it to the blockchain, We then sell that in fractional elements to consumers as they desire. And so on the blockchain, it will show your ownership interest, and the RCM will acknowledge that that interest is owned by the consumer. But what's convenient about that is because it's pooled, it's not fabricated, it's not gone through all the different logistics processes of moving inventory around. You're able to get into metal at tremendously low cost. An example of that is today on our site on onegold.com, you can buy silver for 4 cents over spot. So you can take an ownership interest that is as close to spot as I think you can get for real metal. You know's there. And then you get all the beautiful benefits of an online platform. You can link your bank account to move money back and forth between your bank account and One Gold. You can buy and sell on a moment's notice instantly. You can actually convert that to
How does this digital or blockchain gold include the storage costs then? How does one accommodate for that?
So what we do is we get billed a dollar amount from the Royal Canadian Mint for the pool, and we pass a certain cost on to the consumer. So we're charging 12 basis points right now for gold. So you pay 12 basis points a year for storage, and you pay an upfront fee of 4 cents for the product. And those are your costs. You go compare that to an ETF. I don't know of a single ETF out there that will bill you 12 basis points annually for the operating costs. And you're going to find the spreads on the bid and the ask are very tight as well. So you get what I would argue generally a very cost-effective product, is always backed by metal 100%. And then you get all these digital conveniences, linking it to your bank account or paying with credit card or mailing a check or buying by bank wire. That convenience factor is huge for a lot of consumers.
Right. I mean, I've been writing about the prospect of digital gold for a while. I was never really sure as to how the storage fees would be included, but the way you describe it is it's like an alternative form of a vault, but just as you said, the way it's structured or organized is just more cost effective. Now,
Correct.
Do you foresee people actually using these in transactions?
So we have a vision, and I'm glad you bring it up. So we have a vision that this product is, the starting point is take a physical ownership in the vault, if you will, in fractional form. That's our starting point. This is not a crypto. I want to be very, very clear with everybody. This is not a crypto product. This is truly a digital product. We just happen to use blockchain to track ownership interest, which we think is convenient for consumers. Cryptos, as we all know, are kind of getting into the payment side. What we envision initially, and we're already working on this, is we're going to provide consumers a debit card. And that debit card can be used to buy anything you want. Coffee at the coffee shop, donuts, you name it. And then what we'll do is we will instantly liquidate gold to match the dollar value of the transaction. And if you think about it from a cost standpoint, because it's a debit card and not a credit card, what you're able to do is have very, very low cost. Matter of fact, we're not looking at charging any fees for that service. We make our money on you buying gold and selling gold on the front end.
Right. The question I had, though, is that, I mean, obviously many people want to get out of currencies, well, state or fiat currencies in general.
Sure.
Do you foresee that any retailers or merchants will start accepting this sort of this One Gold or relatives, peers?
It's a great question. It's a great question. We're partnering right now with a couple of very large electronic payment providers about whether or not gold can be in the, we'll call it the digital wallet, if you will, right? So when you walk into a store and you use your phone and you execute a transaction on your phone, can you pull that asset that you're paying for at the cash register from your gold holdings or your cash holdings or the like? I see it coming. I don't know if it's going to happen the next year or two, but I do envision long term. Look, long term, there won't be credit cards. We'll all be paying things with our phones.
You get me excited with. I mean, the long term is there are incredible opportunities. Yeah, so as you said, the modern day credit card with its high fees will be archaic very soon.
I think so, and actually, I think what you're finding is a lot of those credit card companies are getting into digital. And when we offer this debit card, it will be Visa or MasterCard backed. Because they bring fraud protection, they bring some of the comforts that come with that. But it's a debit, not a credit, so it's going to be more paid with funds that you already have. But I do think that the vision is there. I think One Gold has an opportunity to not only give you the ability to spend your gold on anything you like, but also down the road, it's going to give you the ability to borrow against. Because if you think about it, I have an asset, I'm holding it, if you ever want to borrow money to go buy a car, or you need a short-term dollar amount for an expense, an unfortunate expense you didn't plan for, you could quickly go on the app and borrow against your gold holdings and drop it into your bank account, all with a couple clicks on the phone. Generally, I don't like people borrowing against assets. I think it's something you try to stay away from. But when you think about the convenience factor, and the cost of this is going to be minimal, you're talking, rates that are going to be in the 5, 6, 7% rate, where if you don't try to go do short-term borrowing from anyone, they're going to charge you north of 10%. So I think there's also other ways where gold in the long run in a digital format can be used for so many other benefits than just what gold's always been thought about in the past.
Often I wonder about what will happen here, and we've dissected this point with different conclusions about whether cryptocurrencies will compete with gold, or whether they will complement each other and actually help each other, and whether there'll be a renaissance in precious metals ownership. Do you have any, do you want to give your take on that?
Yeah, I think until the crypto products figure out the regulatory side, they're going to always have limitations. I think it was a gambler's mentality back in the day. I think people are looking at stable coins and other things to bring more credibility, if you will, to crypto.
Sure.
Which I think is great to see. Frankly, we looked at our product as maybe going the crypto route, and the regulatory side scared the death out of us.
Well, my sense is that a lot of it is just in the Wild West. So
I think you're right. Well, and unfortunately, you know how it works, right? Three guys could be doing it right, but one guy does it wrong, and he does it so wrong, so much money's lost that they ruin it for everybody. And
well,
I think
that's really happened a lot. Yeah. A lot of people have lost a lot of money in the crypto space.
Right. They were chasing it, right? But I want to get back to the last point there. And do I think that gold can get a renaissance and kind of get into favor again? I think the key is going to be companies like APMEX and One Gold, partner with Sprott. We're going to have to keep thinking about how to evolve the methods and ways you can own metal and the ways you can get benefits out of it than just the traditional physical people tend to think about. And I think as we continue to make it easier to understand, easier to use, I think you are going to see a broader adoption over the long run.
I in some ways I take a wait and see approach. I don't really know, but yeah. but I would caution people away from the view that cryptocurrencies and gold are substitutes.
No, they're not. Good point.
Yeah, because I just think they offer different, at least at this very moment in time, they offer different qualities.
Sure.
And you noted with the stable coins, of course, the stable coins are there to address, and there's no real stable coin perfected or compelling just yet, but they're to address the inherent volatility of cryptocurrencies that exists at this point in time. Whereas gold, I guess its biggest selling point is that its value has held forever.
Yeah, you're right. You're spot on, and I would say, just to put a little promotional pitch in, not just to talk about One Gold and its assets, but or its applicability, is we've actually come up with a little promotion where we're giving $5 in free metal to anyone who creates an account. And we're not doing that so you can, go in and take $5 and run with it. We're doing that because we're so confident the platform is so easy to use. And that's so important in today's times. You've got to make the user interface simple and intuitive, and one that people can embrace. We think we've done that. We actually took the Coinbase technology and the user experience, which we thought was frankly very, very good for cryptos, and we applied that to this space. So just let your listeners know, it's a free $5 if they create an account. They can accept the $5 and they can start buying and selling gold on the fly, and you see just how easy it is to use that platform.
Yeah, I mean, from my perspective, of course, the good news for new entries into gold ownership or precious metals ownership, because there are others, of course, it is getting much more convenient, affordable, safer, and in some ways that, I hope, will root out this problem we mentioned earlier of a warranted concern that a lot of the gold floating around, or paper gold, is not actually backed by the physical. And the more that we have organizations like yours, and there's another one, Anthem, Vault, different organizations seeking to heighten transparency, and there's another one in Austria right now that's been emailing me, but basically they will be somewhat of an antidote to corruption or misrepresentation in the field.
I agree, and I think the other thing I would highlight, and I think this is something you see in your broker accounts, are things where you can do auto investing. The new trend right now is this whole robotic investing, where you put $50 a week in, and you let them go invest your money for you.
Algorithmic investing.
Yeah, it's very much algorithm, and we've actually enabled the ability on OneGold's platform, because you own fractional ownership. You can now go in and say, I want to buy $50 of gold per week. Set that up for the next year, and it will actually execute, and you get dollar cost averaging benefits by buying $50 a week, which doing that physically is a pain in the butt. Doing that through ETFs or through your brokerage account requires other steps to make that happen. This is simple, super simple. And I believe those are the kind of conveniences, I really do believe those kind of conveniences, and knowing the metal's there 100%, and you're dealing with companies you can trust, are going to bring gold back into favor. Just a matter of time.
Right. Yeah, we've been speaking with Kenneth Lewis. He's of AppMax. It's just AppMax, or apmex.com. And I encourage people to, go to the show notes, goldnewsletter.com/podcast. I will insert a link or two to past articles we've had on this evolution, the digitization of gold ownership, which is a wonderful advancement. And I'm glad Kenneth is involved. So thanks for your work in this field and for sharing your insights with us.
Hey, thanks for the time.
Cheers, mate.